Alright, YouTube, Stocks by the Numbers, welcome back. Today is Tuesday, 31st, end of the month here, Halloween, and as we see, it looks like they wanted to bring markets up. Well, they did bring markets up drastically yesterday, and of course we have another green day today, and if you've been in the Discord, you know we've been nailing a lot of calls on the put side for a lot of these major indices, and we've been definitely right more than we're wrong, so we've been doing pretty well for the last several months on this big pullback. Now we're getting a little bit of a bounce. In my opinion, I don't think we deserve this much of a bounce, but that's neither here nor there. Obviously, we're having the Fed meeting, and for some reason people are pumped about that, and people are buying stock. In my opinion, what I've seen is that when the Fed raises rates, that is actually a bad thing, not a good thing. And I just see these days where, you know, we'll be green for a couple of days, and then they'll announce that they're raising rates, but then markets will jump higher instead of lower. And, you know, none of it in the moment would make sense to me. And, you know, then a day or two later, we'll have like 1,000-point drop on the Dow or something like that. And we'll kind of just immediately give back like everything we just gained, and now we're back into, you know, like bearish territory. So that's why I'm really not getting too emotional here with these moves, because again, in my opinion, I do still think that we're in a downtrend. But hey, you know, if they want to bring it up, you know, for this week, and you know, people want to talk about the Fed and oh, this is great. Hey, whatever. Let them rise it up. I hope everyone makes a couple of bucks, and hopefully starting next week, we can get back to business as usual and continue our sell-off and make big money on the put side like we've been doing. But I wanted to look at this company here, XPeng. This is an EV company out of China, and the stock right now, 14.48 as we see, down 43 cents, almost 2.9%. XPEV here on the New York Stock Exchange. What's going to happen? Well, stock right now trading with a market cap a little over $13 billion. The company's losing $1.65 per share, and as we see, the profitability side has just been absolutely horrendous for the last several quarters. Last quarter with a huge miss, posting a loss of 45 cents a share. This quarter coming up, November 15th, estimates of minus 43 cents a share. Now, if these trends continue, then the company's probably going to post a loss of like 50, 60 cents a share or something potentially. So the company, according to historical reports, is more than likely going to miss on the profitability side. And the one thing that really sucks here, in my opinion, is that, you know, I'm sure a lot of people may be hype on the stock, but the problem is you can see, look at the EPS estimates were actually climbing over these quarters. And, of course, we see the company decreasing, just dropping quarter over quarter. So that's definitely a bad sign. But right now we can see, look, last year the company brought in about $4 billion. Right now, market cap $13 billion, right? So they're trading, 1, 2 times, 3 times. So in my opinion, of course, I'm going to say that can go a little bit lower, especially since apparently the company went from several hundred million to several billion, and of course is still bleeding and is still losing money. So that is definitely not a recipe for success. And as we see here, even over the quarters, you can see the consistent drops in revenue here, finally having a little bit of a bounce there for last quarter, Q2 of 23. But overall, we're seeing revenue consistently dropping. And now more interestingly is that this quarter coming up, again, November 15th, 1.21 billion. 1.21 billion. Now I'm seeing some different numbers, right? When we click over here, it's showing me, you know, 698 million about that they reported, and we come over here, we see 721 million. Honestly, either way, it's still going to be a big jump, right? As you see, last Q3 it was in the downtrend, and as you see, the company brought in a little less than 1 billion. Now, estimates are up to 1.21 billion. So I just feel like that's a big jump from quarter to quarter. And with the way the stock has been performing and the company is reporting these estimates, I just have a feeling that this company is going to miss. I really do. This quarter last year, and as you can see, Big miss on the EPS side. Estimates were over $1 billion, and the company came in with $958 million. And then since then has been missing pretty bigly with lower and lower numbers. Yet somehow, again, the stock went from 7 and change to north of 23, 24, and now we're kind of dropping down. Looks like we're in this descending wedge coming into these earnings. But again, in my opinion, I don't know. Even with the company beating these earnings, in my opinion, the stock should go lower. I'm looking for about 12.5, and the quarters, it's just too light. It's just too light. So the company brought in, let's use these numbers, I guess, about 700 million, and then 587 with the big miss, right? So that's what? That's 1.28 billion. Okay, 1.28 billion for the first half of 23. So now in the next 2 quarters, they have to post like 3.2 billion to show that they're growing. Because if we come over here and we look at earnings, you can see they were doing well, and then they have multiple misses on the revenue side. Last quarter was a slight miss. On the EPS side, again, it's just been absolutely horrendous. But if we switch over here annually, first of all, you can see EPS goes positive in 2026, and apparently it's going to take $14.25 billion. So obviously they need to step their game up, because right now they're only making $4 billion. But that's why that makes me laugh, man. Imagine you need $14 billion in revenue for your company to be, net income positive. That throws me for a loop. But more importantly, as you see here, for 2023, estimates for the year are $4.42 billion. And what did we say before? $1.28 billion. Right? So that's what I mean. The company needs to come in with like $3.2 billion. But if we come over here, we see that the forecast is $121 billion and $169 billion. If we add those up, that's $2.9 billion. But again, we needed like $3.3 billion, which means that according to these numbers, and again, we're assuming that they're going to meet these numbers. They could, of course, come in above these expectations, but remember, they could also miss big like they have in the past and come in below these expectations, right? On $1.2 billion, they could post $850 million. Who knows? So that's why chances are the company is going to post probably around $4 billion or less, which means that they're going to be missing this annual revenue forecast number by roughly 10%, which is a pretty big deal, in my opinion. And again, this is why I'm just seeing multiple reasons as to why the stock is more than likely going to go down before it goes up. Price to sales now sitting at about 4.25, right? Not the highest it's been, but not the lowest it's been either. Price to book, same thing, 286. Was much lower, was higher as well. The return on assets has basically been consistently dropping quarter over quarter, along with the return on equity and the return on invested capital. The gross margin percentage was kind of bouncing around, maintaining double digits for multiple quarters, then dropping to sub 9, then dropping to 1.66%, now sitting negative. The operating margin really fell off a cliff here, as we see, minus 26%, gets into the minus 30s, almost minus 50, and then just drops to minus 60+%. And the net margin percentage we were looking at before, basically one of these situations where the more they make, the more they lose. And now we're seeing net margin percentages going from as low as minus 15, minus 20%, jumping into the minus 30s, the minus 40s, now sitting here currently at about minus 55%. So this company is absolutely struggling, and that's why I think it's really going to take a long time. And I know everyone gets pumped about these EV stocks and these auto companies, but again, like I believe I mentioned this a while back in some of the older EV videos, that they all can't work out. I did mention this. I said they all can't work out. And now you're seeing which one's getting delisted, which one went out of business and went bankrupt, which one, like this, is struggling with inconsistent revenue and earnings, and overall the stock is trending downward. That's what I mean. They all, they're all not going to work out and grow like a beast like Tesla. We have an inventory turnover was up to 9.16. Now it's down to 5. So that's about a 40% drop there in the inventory turnover. And see, that's what kills me also about these EVs, right? Because it's like they finally got rocking and rolling. They're able to produce these cars. A bunch of people probably wanted the cars and ordered them, so they had a little backlog. So they're making the cars and they're finally getting them out to these people. But now it's like you have no new orders coming in, right? So like you're making a couple of new orders, but mostly giving other people their cars that they ordered already. But your revenue is consistently decreased. It's almost like I'm getting the feeling where like anyone who wanted one already has one, and no one really wants one. And your expectations were much higher than you thought, and now you may suffer for it. Now, again, I know it seems like I'm beating the company up, but I'm just kind of speaking in a generality here. This goes across the board for all of these EV companies. But asset turnover was climbing, 0.38 up to 0.52, and then has just kind of been consistently dropping, now sitting at 0.31. So the company, this is what I mean, the company is struggling on paper, and as much as we want to potentially deny some fundamentals or talk about potential, tech patterns setting up, listen, that's all fine and dandy maybe for a day trade, but if we're talking about an investment, me, in my opinion, I would not buy the stock here at 14.5, basically knowing that we can just start dropping at any moment. Look at the assets here over the quarters. You can see it was up to 10.3, over 10.5 billion, now sitting at sub 9.2 billion, along with the liabilities basically consistently increasing quarter over quarter for the most part. So if we go back here at the height of assets, you can see lost about $1.5 billion in assets and gained about $500 million in liabilities. And what do I always say? Assets minus liabilities yields total equity. And as we see here, total equity has been basically consistently decreasing for the last 7, 8 straight quarters. And the lower the equity goes, the lower the book value per share goes. As you see here, was at 10.25 when the bull dropped in 21. Now it's at 5.25 as of June of 2023. That, my friends, is not a good sign. If we switch over here to the income statement as well, we can see again revenue just kind of bouncing around. Supposedly last quarter they had a little bit of a rebound here again, where I'm seeing 694 million. This is showing 721 million. It really doesn't even matter. Again, I'm glad that they saw a little bit of a rebound, but again, you can see consistent drops. 1, 2, 3, 4, 5 quarters in a row. Now you're having a little jump. And again, next quarter now coming up in about 2 weeks, estimates of 1.21 billion. That's the most since going back to Q4 of 2021. So that's why I'm saying I would try to play the sell-off here, the overvaluedness, quote unquote, make a couple of bucks, get out before earnings, and then wait and see. I would not, in my opinion, play the company into earnings. Cost of goods bouncing around basically in line with the revenue they're coming in, and as you can see, the gross profit was 160 million and has slowly been dropping. Now as of last quarter, minus 28 million, and then we have to take the gross profit, and of course we have to subtract the operating expenses from it, which as you see is anywhere from 4 to 500 million, and of course the operating income has been falling off a cliff, now currently sitting as of last quarter at minus $442 million. So that's what I'm saying. Basically, any way you look at it, it does look pretty negative in my opinion. And of course, the only way to change my mind with the way I analyze these companies is to shove it right in my face and have the company just start annihilating earnings consistently, and the stock will, of course, continue to grow in value. But again, I'm just seeing a lot of inconsistencies here. We're seeing this random run-up, right? I mean, they brought it all the way down to, 6? Then the company missed earnings, but it went up. Then they sold it off. Then the company missed earnings, but it went up. Then the company had the worst quarter on record, but the stock went from $7.50 to $24. So, you know, you can see we had a big drop here with a bounce, and then we're dropping, and then we're dropping, and then right? We're supposed to be like down here, probably around $5-6. But we're still up here at 14.5, and again, that's only because the stock went from 7 to 24 for some reason. I don't even have to go back and find out why, because it doesn't matter in my opinion. Right now, in this moment, the stock should not have gone to 24. It should not be at 14, and it should be back here at single digits. So that's why, in my opinion, I say inevitably, long term, it will pull back. Here in the short term, I could see it hitting this bottom trend line here that I drew out before potentially bouncing and having a little rally going into these earnings. But yeah, you're looking at like 1270, 1260, and we switch over here to stock charts quickly, and you can see that we've been making lower highs and kind of just trending downward. And as you see, 200-day moving average, 1265. In my opinion, I think that's the mark. Bottom Bollinger Band, 1258. That's why I'm looking for like 1260. I do appreciate the fact that the MACD has risen and has potentially, yeah, it looks like it actually did potentially cross here on the daily. You know, but again, I have to be wary because I do not trust, personally, this rise in the market. So, again, markets were rising, so, you know, it was kind of taking something like this up with it when it really shouldn't have been, in my opinion. And today, even on the pullback, 2.8%, right? If we were continuing our downtrend and our sell-off in the markets, like I feel we should have, you know, if this lost almost 3% today, then that means on a real red day, this thing probably would have been down like 7 or 8% today. You know what I'm saying? So that's why I'm talking about throwing the wrench into the cogwheel of our machine here, because we did hit tops. We were selling off as we should have been, and especially the people in the Discord were making some really nice returns buying puts on the major indices. And now that's what I mean. They just kind of want to stall it and just delay the whole strategy for, you know, this week or whatever with this BS Fed meeting. And you know, now it's just going to take a week or two longer. But I still do like that 1265 level. I think that's very realistic. I think it's justified. I think it's feasible. And even here on the weekly, we can see the 50-day moving average sitting here at 12.25. That's why, in my opinion, I really do think it should drop to the 12s. And again, this whole time, this thing had this BS rally. Look at the MACD and look at how high and out of control it got on a stock that, in my opinion, didn't deserve that type of rally. Right? Now it plateaued along with the stock. Then it started to U-turn and sell off. Now the MACD has crossed on the weekly back a couple of weeks ago, and you can see that's where the stock went from like 17 and change and then, you know, immediately dropped into the 13s. And that's what I'm saying. That's why I do think it's going to continue to step downward. And even though we are in this wedge, this is November, so we're going to have to go out to February look. And that's almost right near where the apex is. And this next quarter, I believe, they're estimating even more on the revenue side, roughly $1.6 billion. So that's why what this company actually has to do is kind of post in line, have the bleeding not be too excessive, so that can actually keep them in the wedge. Then in February, they have to come and beat those revenue estimates north of $1.6 billion, and then if they do that, that'll justify the pop out of the wedge, which of course would be even more justified because of the recent earnings beat. But again, even if they do meet those numbers, they're going to miss for the year on the $4.42 billion estimate. Company probably going to bring in about $4 billion, but of course we're going to cross that bridge when we get to it. But that's why I feel in the immediate short term, you could see potentially about 12.5 here on this stock. Then if you want to get out and ride the wave going into earnings, that's entirely your own prerogative. Again, in my opinion, just my opinion, I personally would not hold this stock through earnings. And then if we do happen to do everything I say and we stay inside this range and this wedge, then of course I will try to jump back in and reevaluate the situation in February before they post next quarter's earnings. But this video is already too long. I wanted to do a nice quick one. I probably ended up talking for like 20-25 minutes. My apologies. But if you stuck with me this long, thank you so much for your time and your attention. I appreciate it. But I'm going to end it there. So Stocks by the Numbers, thanks for stopping by. Thumbs up, algorithm helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. I'll do videos on EV stocks, on OTC penny stocks. I don't care. Whatever you guys want me to talk about. Just do me a favor, though. Push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I say in every video, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. And I will catch you guys on the flip flop later.